Audit 339 MIA's bylaws. Laws on professional ethics. Ethical behavior is crucial in accounting profession. First, to ensure professional accountants act in a dignified manner. Secondly, to act as a guidance and strengthen the relationships between members, and lastly, to boost confidence from clients and public at large. Section 100. Fundamental principles and conceptual framework. Section 110. Integrity. Section 140. Confidentiality. Section 130. Professional competence and due care. And Section 120. Objectivity. Professional accountants are obliged to be straightforward and honest in all professional and business relationships. Secondly, they should not be knowingly associated with any reports, returns, and communications where it contains false and misleading statements, and omits information that required where omissions of information would be misleading. Objectivity imposes an obligation where professional accountants not to allow bias, conflict of interest, or undue influence of others to override professional judgments. They may be exposed to situations that may impair objectivity. Shall not perform a professional activity if a circumstances biases the accountant's professional judgments. Professional accountants must maintain professional knowledge and skill at the highest level to ensure clients or employer receives competent professional services. Professional competent are divided into two, mainly are attainment of professional competence and maintenance of professional competence, where it requires continuous understanding and awareness. Professional accountants must act diligently and in accordance with applicable technique and professional standards. It means to act in accordance with the requirements of assignment carefully and thoroughly and on timely basis. They must ensure those working under their authority are in professional capacity which has appropriate training and supervision. Section 140. Confidentiality. Obligated to respect the confidentiality of informations acquired from professional and business relationships. Not allowed to disclose informations to third parties without proper and specific authority, unless there is legal or right to disclose. Not allowed to use informations for the personal advantage of the professional account. Circumstances required to disclose the confidential information. Disclosure are permitted by law and authorized by client. Disclosure is required by law. Used as evidence in legal proceedings. Disclosed to the appropriate public authorities. Next, professional duty or right to disclose. To comply with the quality review of MIA. Respond to inquiry or investigation by regulatory body. Protect professional interest of professional accountant in legal proceedings. Comply with the technical and professional standards. Factors to consider whether to disclose confidential information. 1. Interest of all parties could be harmed if the client give consent to disclose the information. 2. All relevant information is known and substantiated. If the situation involves unsubstantiated facts, professional judgment is used in determining the types of disclosure to be made. 3. The type of communication expected and to whom it is addressed. 4. The parties receiving communication are appropriate recipients. Section 150.1. Professional behavior. All professional accountant must comply with relevant laws and regulations and avoid any action that discredits the profession. Sec.150.2. Advertising, marketing and promotions. Shall not bring profession into disrepute and ensure that advertisement, marketing or promotional material is professionally dignified and in good taste. Carried out in accordance with relevant legislation where applicable. Shall not be honest and truthful. They must not make exaggerated claims for service they able to offer, the qualification they possess, or experience they have gained. Make disparaging references or unsubstantiated comparisons to the work of others. Section 108. Threats and safeguards. Threats are created by broad range of relationships and circumstances. Threats can make a professional accountant not comply with the fundamental principles. Threats fall into more than one categories. These threats are: self-interest threat. The financial or other interest will inappropriately influence the professional accountant behavior or judgment. Self-review threat. A professional accountant will inappropriately evaluate the previous judgment made by previous accountant. Intimidation threat. The client or employers threaten the professional accountant with dismissal or replacement. Advocacy threat. Help to promote a client's or employer's company or business. Familiarity threat. Due to long or close relationship with a client or employer, a member should not use a trade or fictitious names to practice the profession. A member in public practice is not allowed to practice as a chartered accountant unless A. in his or her own name, B. in the name of his partner being chartered accountant, C. In the name of a firm existing at the time of coming into operation Act. Section 290 Independence. Independence in fact means the auditor approaches the audit work with an open mind and takes an unbiased viewpoint in the performance of audit tests, the evaluation of the results, and the issuance of the audit report. 501(1). A member in public practice should not allow the name of the firm to be used by any organization to conduct business that is not suitable for public practice or would bring the profession disrepute. 2. A member in public practice should not report or express an opinion on financial statements by a person who is not a member of the firm, unless the member of the firm is also a member in public practice, except for entities which are incorporated or operation outside Malaysia. 3. A member in public practice should not help in any way of any person who practices himself as a chartered accountant in Malaysia. 4. 504. A member in public practice should not allow any person who is not a member of the institute to practice partnership with him or her as a chartered accountant. 5. 505(1). A member who is not entitled to be a member in public practice is not allowed to A. Hold himself out to be a member in public. B. Provide public practice services as a chartered accountant or any service similar in nature. C. Previous member may carry on the work of a tax consultant or a tax advisor, if authorized to do so under Section 153 of Income Tax Act 1967. 3. A member who is registered with the institute as a licensed accountant is not precluded by paragraph 500.51 from carrying on any practice in which he or she was professionally engaged immediately before the coming into operation of the Act. 6. 506(1). The requirement where a member participate as a director in a company which offers taxation, tax advi and tax consultancy services. A. The member and/or the company does not follow any written law. B. The companies seem not described as chartered accountants or licensed accountants. Upon entering into negotiation, a professional accountant may demand an appropriate amount of fee. Threats to compliance with the fundamental principles may arise from the level of fees quoted. Existence of threats depends on the level of fee quoted and the services provided. Significant threats will be evaluated to eliminate the threats or to reduce it. Fees charged for assurance engagements are valued based on 1. Skills and knowledge required for the type of work involved. 2. The level of training and experience of the persons engaged on the work. 3. The time necessarily occupied by each person engaged on the work. 4. The degree of responsibility and urgency that the work entails. A professional accountant may receive a referral fee or commissions relating to a client and from a third party in connection with the sales of goods or services. Accepting it creates a self-interest, threats to objectivity and professional competence and due care. A professional accountant in public practice may also pay a referral fee to attain a client. The significance of the threat shall be evaluated and safeguards applied when necessary to eliminate the threat to an acceptable level. A professional accountant may purchase all or parts of another firm on the basis payments will be made to individuals formally owning the firm to their heirs. Payments are not regarded as referral fees or commissions.